Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that pump and then dump on the Bitcoin chart. Guys, I do think this dump is basically industry-wide in the financial circles because of the extremely good jobs report where the ADP employment report did show that more than twice as many jobs were created as were expected, and almost twice as many as were created the last measurement of employment. And so, guys, love him or hate him, the Biden economy is actually booming. And, it's kind of hard to say that it's just because of filling the gap from COVID, which was now more than 3 years ago. Guys, we have to give credit where credit is due. Now, we also have to put blame where blame is due because, of course, the one thing that the economy still has going against it is that inflation, that sticky inflation from COVID, which, of course, was the making of Donald Trump, Jerome Powell, Biden, and then a bipartisan Congress. Nobody has their hands clean in this. And of course, since a year after the Biden administration started, which a lot of people think was a year too late, Jerome Powell and the Federal Reserve finally started increasing interest rates, and they've just been trying to fight inflation ever since. Now, why am I mentioning all of this? Because if the economy is booming, that means that inflation is likely to continue, right? Booming economy equals overheated, equals more competition, equals prices rise. More people employed means more money in their hands, means that they are spending more. And so inflation increases, and this is why the stock market and, of course, crypto and some other assets are dumping, because they realize that probably the Federal Reserve is not going to cut rates, which is they were expecting a couple rate cuts by the end of the year, and they're starting to realize maybe at best we're going to get just a continuation of the pause, and maybe, just maybe, the Fed is going to increase rates again because we can see inflation. Now, people being hired isn't inflation by itself, but people having money to spend, which we think of as a good thing, that should be a good thing. Unfortunately, because they gave all that trillions of dollars away and they printed trillions of dollars at banks in the form of loans to companies like PPE loans, and they also gave out stimulus checks, and then they also extended lines of credit. All of these things extend the money supply, and they didn't build in a mechanism to bring it back in through taxation of those people who benefited from it, especially those elites. We're not talking about the guy that got a little bit of a stimmy and spent it on something. That's what the stimmy was for, to go spend it on something. We're talking about the millions of dollars that went out to entities that really didn't need those millions of dollars or even billions of dollars. And we just have no way of getting that back. How is the economy making the adjustment? By inflation. That's how the economy self-corrects, through inflation. If you're not taxing that money back from the elites that got all that money, then inflation is going to do the job instead. And I don't see anyone taxing the elites. I only see people saying lower taxes, but sometimes when you put out too much money, you have to get it back from the people that it went to. Instead, we're just letting everyone absorb the cost of that through inflation. And guys, I hate taxes as much as the next guy, okay? I hate taxes. I hate government waste. I don't want to give money to, the government. But when they have already given money out, and we see that XYZ companies are having tremendous growth, unprecedented growth off of those that stimulus that was corporate welfare, then maybe just temporarily as kind of a windfall tax, we should ask for it back. Otherwise, yes, you get to pay for it in the form of inflation. You get to pay for those guys getting bonuses. You get to pay for those guys buying their own stocks back and then dumping them on your heads at the top of the market. That's what you're paying for through inflation. And again, guys, no one has their hands clean. No one has their hands clean on this. Half of that spending was during the Trump admin. Half of that spending was during the Biden admin, primarily from things that were earmarked by a bipartisan Congress signed off by Trump during that era. And of course, Biden was part of that. So all of these guys, especially the Fed, have blood on their hands. And this is what the market is afraid of. They're afraid that the Fed has to continue to increase rates, continue to strangle banks, continue to strangle the economy in order to try to tease out these dollars out of the economy that they had dumped into the economy artificially. That's what's going on. That's why you're seeing pullbacks. And that's why good news, like great jobs, great job, Biden. Huge jobs number, incredible jobs number. That's why good news is bad news. Because the better the economy does, the harder it is to fight inflation. The better the economy is, the harder it is to get that money out of the economy and back into the banks, because people want to spend. People are going to have the ability to spend. They're not going to be hodling their pennies because they're afraid that they're not going to have work next month. Twice as many people just got hired as was expected. They're not afraid they're not going to have a paycheck. So they're not going to be putting their money into the banks. And the banks is basically that Federal Reserve system. That's bringing the money back into the system that was pushed out there in the form of PPE loans to the super wealthy, in the form of stimulus checks to everyone, regardless of your wealth, which was insane. And then also the sneaky way through not only US banks, but also foreign banks that are authorized to print just regular banking loans, extensions of credit marked, right? Earmarked in dollar denominations. Because credit is also a form of money. You can pay using your credit card. You can pay using a check. You can pay on credit. And so that is an extension of the money supply. And these banks all across the world, much more than what you think happened just in the US, were printing these type of loans and expanding the money supply during those times. So it's a very hard thing to get control of, guys. It's a very hard thing to get in control of. And I'm glad that people are able to get jobs, but we're in this situation of stagflation, where good news is bad news, where we want a strong economy and we want low inflation, but we actually only get to have one. We have to choose. And the person who makes that choice, actually the council of 12 people who get to make that choice, is the Federal Reserve, topped by Jerome Powell. He will make that decision. And the market thinks that when he sees this extremely good number, when Jerome Powell, the super elitist Jerome Powell, when he sees this good number of people getting jobs, well, he's going to put his elitist hat on. The man was hired by Donald Trump. He had his term extended by Biden. Everyone has blood on their hands in this case. Powell caused the problem, And now he's the man designated to fix the problem. And the market believes that he is going to choose to tighten the economy and perhaps push us into a real mega recession. And that's what the market is fearing. Got it? Okay, let's move on. Let's go jump to, straight to the charts here, guys. What you can see is the plays that we did have off of yesterday's setup. So as you know, we did have this falling wedge. That falling wedge did not end up working out originally. It did break out to the upside, which is 70% chance of breaking to the upside. It should have continued, but it didn't. Market makers on the 4th of July decided to liquidate everybody and ignore a really classic, really strong pattern and just push it down just to screw everyone, basically, while you're out, having barbecue and doing fireworks with the family. Just decided to screw everyone. Well, at that time, I noticed that we were creating out of that a broadening descending wedge. And a broadening descending wedge would have essentially the same target. In other words, the market makers faked us out with this drop, and then they pushed us up to the target and actually extended beyond it. And we could have seen that. We could have seen that in the momentum pool that I laid out for you guys. So here was the beginning of the momentum pool, above the volatility pivot, above the pool. You take that long. You take that long. It took that long. You got a 3% play to the upside, which is great. 3% is great. For what? For a couple hours of work? Okay. It's the hour chart. You did 3 hours of work, 4 hours of work, and you got 3% on your portfolio. That's fantastic. 20x leverage, 60%. It's pretty good, guys. All right. Of course, it topped out at the top of the range where we've been topping out ever since. You see this high right here. It's up to you to take your profits wherever you feel comfortable. You could have used the measured move. You could have used the top of the range. This was a valid zone to be taking profits. If you didn't take profits because you believed that we were just going to go up only, well, that's how you get wrecked. You have to be humble in trading. You have to know in advance where you personally are willing to take your profits. For me, I would have just taken it at the measured move, somewhere right around here. You can see that we did wick higher than that significantly. So the next place would have been up here just to take out this liquidity over here. And then the next logical place would have been right above the highest wick over here, just to take liquidity over here. And because they took that liquidity, you could imagine they might want to send the chart down because they took out all the liquidity to the upside. They triggered every stop loss to the upside. And then what did they do? They took us straight down. But we didn't hold on to the edge of that broadening descending wedge here. We broke down below it. Now that could have been a balance point and the bulls could have retained control and we could have gone on our merry way. Maybe we could have drawn even a cup and handle here and just rocketed to the upside. But you had the key levels, Alpha fam. You had the key levels. You saw that we broke down from the bullish control zone. We lost the hold momentum level. We lost the volatility pivot. We lost the bottom of the pool. And that was a shorting opportunity. And so what do we see? At the top of the pool there, as soon as you re-entered the pool after skyrocketing off of it, there was a change of momentum. And once you re-enter the pool, you're clear to take that short. Once you get underneath the volatility pivot and the bottom of the pool, underneath the pool, you're clear to take another short, right? And so you had 3 huge tradable setups where, depending on your leverage, you could have gotten amazing returns. You could have doubled your portfolio just on these 3 moves alone. Okay? That's the power that I'm giving to you guys. Yeah, yeah, this pattern up here didn't work out, okay? It didn't work out. It was a delayed little market maker kind of thing. We merged into a new pattern. We adjust with the chart. We don't fight the chart. We go with the chart. We get our standard lines here. We put our line in the sand, and then we take our trades off of it to the upside and to the downside because we don't care. We're traders. We're not quote unquote investing. We're trading. Nobody cares if it's up or down. You have a line in the sand, and you trade it to the upside, you trade it to the downside. Just emotionless, guys. If you feel some emotion like you shouldn't be doing this, that would be betraying Bitcoin. Just get out of the market until your emotions pass, okay? Just how it has to be. And so we got 3 pretty epic trades here. You know, if you're a leverage trader, if you're scalping, you know, 0.5% is really great. So 3% is extraordinary. You know, 2.3% is extremely, extremely good. So congratulations, Alpha Fam. You guys are absolutely killing it. Where does that leave us now? Well, I can give you an update. You can see that we are coming off of a momentum shift right here, where we did, of course, have that drop. We are popping back up. We're currently entering the new pool at 30,062. We might bump our head into this general continuation around 30,128, and we may have to retest it. But we might expect that if this isn't a fake out move, right, if we don't just drop back down and then try again, that we could cross to 30,192. However, just always remember the first move can be a fake out move. Okay, there's nothing confirmed here. This is just a setup. And we got validated by entering the pool, but we don't have any confirmation yet. Okay, we don't have any confirmation of a higher low, for example. We don't have a trend. We just have this candle popping up. That's all. Okay, so we don't have a trend to confirm what we're doing here. We're not above the Bollinger Band midline, so we can't just like imagine that we're suddenly bullish. Okay, we just have a setup. We have conditions, and then we have validation entering at the bottom of the pool above the volatility pivot, re-entering the pool. That gives you a permission to long. And we move our stop loss up to our entry now that we're inside of the pool. And if we come back to the bottom of the pool, okay, we get stopped out. We wait until we have another momentum shift. If we re-enter, we try again. Okay, we try again. And likewise, if we succeed and cross this pool and get up here and bump our head and get rejected, and we re-enter the pool, that's our permission to short. And then we quickly move our stop loss to our entry price so we can't lose money. And as we're falling down, maybe we get rejected and come back up and maybe get stopped out at a net zero. Or maybe this thing continues to go on its way and you make a ton of money. Okay. So if that happens, you have permission to short on the re-entry. You have permission to short when we lose the volatility pivot after losing the pool. Okay, so if you miss this one, just wait until we lose the volatility pivot also. Volatility pivot is at 29,986. That's where volatility gives us a bias to the downside. And if we do continue to pop up, then we're going to have to take out the neutral point of control and recapture the Bollinger Bands in order to potentially get sent. And that neutral point of control is at 30,422. And that could potentially have us take out some liquidity up here near the bullish control zone at 31,058. Okay, or just under there, 31,000-ish. That's your setup on the 1 hour, guys. Okay, that's gold right there, guys. You can trade off of that. Let's go ahead and look at the previous 6-hour chart. So we're still on the 1-hour, trading view, but we're looking at the 6-hour setup from yesterday. You would have been over here. You had that permission to long. You got that trade to the upside. You lost it, stuck your toe back into the pool under the pivot on the 6-hour. Permission to short. You would have shorted that sucker all the way down here. You could have taken your profit here or here. Alpha Fam absolutely killing it. This is the setup that I gave you guys. Okay, you could have taken that. You would have had 2 epic trades off of that 6-hour pool. Just move to the real 6-hour chart here and the update, because that was the old chart again. And you can see that we are getting a little bit of a pop off of this wick right here on the 6-hour. Again, we don't have any proof of a trend. This is just conditions. Okay, we're just seeing a turnaround. We don't have a higher low being put in or anything yet. And so this candle could be a fake out, but assuming that it continues to go, and you can take a chance at the bottom of the pool here, then we would expect it to get all the way to 30,571, where it has to flip that area in order to continue bullish if you're trading on the 6-hour. That's the neutral point of control at 30,546, and then 30,571 is the top of the pool, where you'll be above the pivot, above the pool, permission to long again. Okay. Now, these things don't always make it in the first go. So if we do get rejected somewhere here around the volatility pivot, because we might just be testing the pivot before we continue to the downside. Again, we don't have a higher low. We just have this low. Okay, we don't have any trend. We have lower highs and lower lows. We have nothing going on here to the upside. This could be a fake out. So if we get rejected the first time, probably going to happen around the volatility pivot, somewhere around 30,219. Then we'll see, do we hold the bottom of this pool somewhere around 29,899? Maybe the bearish control zone around 29,917. We could wick down and then come back in, and that'd be great because that would show a change in momentum. That'd be permission to long at 29,899. Or conservatively at 29,917, and then you take that to the pivot. You can take some profit there if you want. If we flip that, then you can continue to long, permission to long again at 30,219, and then same as the other setup. If you get above the neutral point of control, then permission to long, where we might try to take out some of this liquidity over here. Well, this is already taken out, but all right, guys, so that's your 6-hour setup. Then let's go ahead and take a look at our last daily. The daily, I did mention, it was so flimsy, we just weren't able to hold it, so we dropped down. We did bounce off of the bullish control zone. That was our momentum shift. We pushed up into the momentum pool up here. That was permission to long. Got a great play off of that. Came back down, re-entered the pool underneath the pivot. Permission to short. 2 epic trades on the day, guys. Again, you could have doubled your port on this stuff. Okay, or at least gotten 50% or something. You could have gotten something out of both of these. Okay, these were very clean trades. Alpha Fam absolutely killed it, guys. Now we're back under that bullish control zone, which suggests that, we could go and test the neutral point of control. So let me go ahead and update you because we're no longer on this level. We're now on a much lower level. Just so happens we got rejected up here, right? And so let's go ahead and see what's going on here. As you can see, the bullish control zone did get pushed up significantly because of our little drop there. Just kind of reset things in kind of a negative way for us, right? Let's jump over to the 1-day chart. I was still on the 6-hour. You can see that we are getting that bounce right off of the Bollinger Bands midline there. There's our Bollinger Bands. This does suggest that we're contracting in volatility, and so probably, we're just consolidating. But you can see that we're at the bottom of this pool. Again, we don't have any proof. We don't have any proof. This is the new daily chart. We don't have any proof that we're going to just cross it. But should we hold above 29,899, we can potentially get up here to the bullish control zone at 30,807. Or should we flip 31,039, then we're going to add momentum to the upside. And if we take out 31,185, then that's permission to long again. That'll be a setup for a long there. Continuation to the upside. If we lose 29,899, there's potential that we're going to play around with this Bollinger Band midline and the neutral point of control. Losing the neutral point of control and getting embedded underneath the Bollinger Band and the neutral point of control at 29,313 or lower, then there's a chance that we test this bearish control zone as far as 27,449. I did prepare you for that a couple episodes ago, and I think last episode also, that it is highly possible that we could take out some of this liquidity over here, maybe bounce at 28. You can see some levels over here, right, that might just give us some strength. 28.5, 28, okay. We prefer not to fall under 29,000, but if we do, then I'm going to be looking at those areas to take about 50% of this liquidity or more should we tap the bearish control zone. All right, guys, and those are your setups for the daily chart. I hope you find this valuable. You guys can make money off of these levels, okay? Don't doubt yourselves. I know charts are always jittery, but you have to have a line in the sand, guys. Let's go ahead and just take a look at our EMAs. See if anything's going on here. And we can see, yeah, that we are in a bit of a squeeze here, potentially to the downside. The 20 simple moving average is still pointed up, but the 21 exponential moving average is starting to flatten out. If this thing starts to curve negative, we could get squeezed to the downside. Otherwise, on the day, this is just a healthy check back, and there is a potential for us to pop out of this thing. But I don't want to give you too much hopium or anything. I'm just saying there's still a chance. And really, it's not until we're under that 29,000, 600-ish, right? 29,500-ish that we start to push down. And then we would naturally look at that 29K area, okay? And then below that, we might look at that 28. You can see there's a lot of support underneath us, all the way down to 26,000. So the main region of all the support on the day in terms of EMAs is between 28.7 and 27.5. I would probably expect that we catch a bounce there if we don't bounce here. And then the bottom of the Bollinger Bands is at essentially 27,000. So should we flash wick down there and then pop back up? It's possible. It's possible. One thing that I've been paying attention to is our volatility on the daily. You can see that we did just cross down, so we are going to start pushing in whatever direction we're going to be oriented at. And so where we pop up to or where we drop down to really matters, because we could have a violent expansion to the downside or to the upside. So we're just going to watch this. It's not ready to go yet. It needs to pass 10%, 15%, maybe even 20% to get confirmed, usually around 15%. And then we'll have a good idea of how it's going to go. You can see that we do have that drive of bearish divergence on the daily that did end up playing out. You can see why we broke out of the bullish control zone. We broke the EMA on our RSI, and then we broke out of the bullish control zone, and that's why we're kind of flirting with the neutral point of control. Bulls have to prove themselves to get back into the bullish control zone. Sometimes this happens, and then they prove themselves and they get back up there. Very common thing, in fact. fall out, prove themselves, get another push to the upside, and then drop back down. Yeah, this is a lower high, but on the price action, it's a higher high, okay? But so far, they haven't proved themselves, so we do have to watch that. And on the 12-hour, I don't really show the 12-hour that much, but look at this. Look at this, how we're pushing down as the Bollinger Bands are really skinny here. You can see that on the 12-hour, we're already starting to have a squeeze to the downside on the EMAs. And also on the Joule, we have a really negative signal that suggests that this could be a pretty strong pullback right here. So we're just going to wait until this signal kind of chills out a little bit. I'll show you what I mean. See how we have a massive signal to the downside here? Just got to wait till it kind of chills out. And we're just entering this type of an area. Okay, we're just entering it now. So it could take a little while for it to chill out. Okay, and then be ready to go again. Just going to wait on that. Also on the 12-hour, we just have a bunch of, bearish divergences stacking up, just pushing us down. You can see we've lost the neutral point of control. And so you really have to grab that. Otherwise, we could potentially test the bearish control zone, like I was saying, much deeper pullback. Just pay attention to it, okay? It doesn't mean anything's broken. It just means we're having a pullback, that's all. And it could be kind of a chunky one, that's all. Let's get the 6-hour. On the 6-hour, we are starting to, we're getting that bounce off of those kind of 89s, 100s. And then we do have a lot of good support around 28,000. On the 1-hour, we have some pretty decent support around 29,000 to 28,000. Yeah, so we lost the 300. So if we do drop, then I would be looking 28 to 29. It's the story of the EMA is on the 1-hour. On the 1-hour, nothing looks too broken yet. So, but then again, it's kind of a weak time frame. But you do have the setups for it. All right, guys. It's going to be your alpha for the day. Stay safe and happy trading.